Okay, let's unpack this. Sometimes it feels like you're trying to navigate a really busy market almost blindfolded. So today we're doing a deep dive into a pretty fascinating strategy. It's really designed to give you more clarity, more confidence, helping you spot market trends with, well, better precision, hopefully boosting your trading performance too. It's all about cutting through that noise, right? Getting a much clearer picture of what's actually going on.
Absolutely. And what's really interesting here, I think, is how this strategy tries to give you a solid foundation, moving beyond just guesswork. It smartly combines some specific indicators to offer a more precise, maybe more reliable approach to understanding those market movements. It's kind of like trying to see not just the waves on the surface, but understanding the actual currents underneath.
Okay, so what are these powerful tools then, the ones that help clear the fog? First up is something called the DFT Overlay Indicator. Think of this one as like a sophisticated compass for the bigger market trend.
Exactly. And it's got specific settings that really help sharpen its signal. We're talking a period of 15, and kernel smoothing set at 12.
Right. So for you, looking at the chart, this basically creates a dynamic green and red smoothing line. And alongside that, a distinct white DFT line.
So, okay, how do you actually read these? How do you interpret them? Well, when that smoothing line turns green and crucially dips below the white DFT line, that's your strong buy signal. It suggests the underlying trend is pretty firmly bullish.
Okay, green and below means buy. Makes sense.
Right. And conversely, if it flips red and moves above the DFT line, that's pointing towards a sell, a bearish shift. But, for even better accuracy, for more confidence, you really need a second player in the strategy. One indicator is good, two is often better.
Okay, this is where it gets really interesting then. Adding layers for confirmation. So we then layer in the magical momentum indicator. This one sounds cool. It has its own green and red momentum line, right? Pretty straightforwardly telling you if the price itself is actually moving up or down right now.
Exactly. It's about the immediate push. And the settings recommended for this one are a responsiveness of 1 and a period of 45.
Got it. Responsiveness 1, period 45.
So if we connect this all together, the real power, the real clarity, that comes when both indicators are actually saying the same thing. They have to agree. For a strong sell signal, you need that DFT smoothing line to be red and above the white DFT line. And you need the magical momentum to also be red. Plus, ideally, you want confirmation from a bearish candle. The price closing lower than it opened in that period.
Okay, so DFT red and above, momentum red, and a bearish candle. That's the sell trigger.
That's the sell trigger. And for a confident buy, it's the reverse logic. You're looking for the DFT smoothing line to be green and below the white line. Magical momentum also needs to be green. And you guessed it, confirmed by a bullish candle where the price closed higher. This kind of dual confirmation, it really helps refine your entry and potentially your exit points too.
Right. It adds that extra layer of conviction. So let's imagine this in action. Say, on a 15-minute Amazon chart, maybe. If you see the DFT smoothing line green and below, okay, check 1. Then magical momentum is also green, check 2. Plus, you get that nice bullish candle forming. Check 3. That's your confirmed buy signal.
Precisely. That's the setup. And we've seen examples where this leads to trades potentially hitting their target quite well, maybe using something like a 1 to 1.5 risk-reward ratio.
So for every dollar you risk, you're aiming for $1.50 in profit.
Exactly. And you'd place your stop loss, your safety net, essentially just below a recent price low point, typically. But of course, let's be realistic. Not every single trade is going to be a home run. That's just trading. Sometimes the market might stall or, it just doesn't quite follow through as expected. So you might close the trade early if it isn't hitting your target, or conversely, your stop loss isn't triggered, but the setup looks weak.
Yeah, managing the trade is just as important as entering it.
Absolutely crucial. And it's so important to remember, while these tools, they are designed to help reduce risk and give clearer signals, risk is always present in trading. You can't eliminate it entirely. These tools enhance your probability, they give you an edge, hopefully, but they don't offer certainty.
That's a really key point. No guarantees.
No guarantees.
Okay, so bringing it all together, what does this really mean for you, the listener, trying to navigate these markets? It seems like combining this DFT overlay with the magical momentum indicator, it could significantly sharpen your trading approach, offering more precision, maybe a clearer, more informed path through what often feels like a really volatile environment.
I think so. And this really brings up an important question for you to think about, doesn't it? How might integrating specific complementary tools like these tools that look at both the underlying trend and the immediate momentum, how might that change your approach to navigating market volatility? And maybe think about what further benefits could these deeper multi-indicator analytical approaches unlock for your own decision-making process down the line.